You know, every single company out there tells a story, not with words, but with numbers. It's a story of how they're doing. Are they winning? Are they struggling? What's their overall health? Today, we're going to learn how to read that story. We're going to break down the main financial statements so you can finally understand what's really going on inside any business. Let's dive in. I mean, think about it. It's great to have an amazing idea or a product everyone loves, but how does a company actually prove it's a success? To investors, to a bank, or even to itself? They can't just say, hey, trust us, we're awesome. No way. They have to tell a clear, consistent story, and it all has to be backed up by the numbers. And that, right there, is what financial statements are all about. They're the official scorecard. Think of them like a company's annual health checkup with a doctor, or maybe its final report card for the year. It's the structured, no-nonsense way to see exactly what's happening with the money. All right, Section 1, why businesses keep score. Before we start digging into the numbers themselves, we kind of need to understand the rules of the game. Like, why do these reports even exist? And who says how they should be written? Turns out, there's a really solid system behind the whole thing. So the foundation for all of this is something called the conceptual framework. The easiest way to think about it is it's the official rule book. It's what makes sure that when one company talks about profit, it means the exact same thing as any other company. This rule book is why we can compare two totally different businesses. They're all playing the same financial game. So what's the point of this rule book? Well, the goals are pretty clear. First, it's about giving people useful info so they can make smart decisions with their money. And second, it's a way to check up on management to see how good of a job they're doing with the resources they've been trusted with. It really all boils down to building trust and clarity. Okay, let's get to our first big chapter in this financial story. This one answers the most basic question you could ever ask about a business. Over a certain amount of time, did they actually make any money? Now, to make all this a bit more real and less like a textbook, we're going to follow the story of a made-up company. Let's call them XYZ Co. By using them as our example, you'll see exactly how all these concepts actually work in practice. So this right here is the statement of profit or loss. You can think of it as a story that starts at the top and works its way down. We kick things off with revenue. That's all the money that came in the door from selling stuff. Then we take away the cost of sales, what it directly costs to make the things we sold. What's left is our gross profit. From there, we just keep subtracting all the other costs of doing business, pay our taxes, and we get to the big finale. The profit for the year. This is it. This is the famous bottom line everyone's always talking about. This one number tells us if after every single penny was counted, XYZ Co. actually made money this year. It's a huge deal. But, and this is a big but, it's not the whole story. Knowing you made a profit is great, but it doesn't tell us what you're actually worth. Which brings us to our next big document. Section 3, a snapshot of wealth. We've got to shift gears now from looking at performance over time to getting a clear picture of the company's value at one single moment in time, like a photograph. And to understand this snapshot, you really only need to get two key ideas: assets and liabilities. And honestly, it's super simple. Assets are all the valuable stuff the company owns: cash, inventory, buildings. Liabilities are all the stuff the company owes to other people, like loans from a bank or bills they haven't paid yet. It's literally just a balance of what you own versus what you owe. And that balance is shown perfectly on the statement of financial position. This here is the most fundamental equation in all of accounting. Assets always have to equal liabilities plus equity. So what's equity? Well, that's what's left over for the owners. Imagine if the company sold all of its assets and paid off all of its debts. Whatever cash is left in the end, that's the equity. It's the owner's true stake in the company. So, Section 4, connecting the financial dots. We've got our two big stories, right? The story of profit over the year and the snapshot of wealth at the end of it. Now for the really cool part. We're going to see how these two things aren't separate at all. They're actually part of one single interconnected story. So how do they link up? It's a pretty simple flow. First, the company earns that profit for the year we saw on the first statement. Now, whose money is that? It belongs to the owners. So second, that profit gets added to the owner's pot, into their total stake in the company. And now for the grand finale, that final updated amount of owner's stake, that is the exact same equity number that shows up on the statement of financial position. It links up perfectly. So the key takeaway is this. Profit isn't just a static number on a page. It's a value that literally moves. It flows from the profit and loss statement and lands right on the statement of financial position, changing the company's total worth. Understanding that flow is really the key to seeing the entire financial picture. And there you have it. You now know the basic plot of the story every business tells with its numbers. The story of what it earns, what it's worth, and how those two things are completely connected. So the next time you look at a company, you can see beyond the flashy headlines and read the real story for yourself. The only question is, what story will you look for next?